Soy is outperforming, and that's because traditional finance is getting involved. There has been a major staking transaction. A large fraction of soy supply is now locked up. The question is, how much longer can this rally last? Let's have a look at the on-chain metrics, the data most people are not considering. There are also more partnerships, for example, with a Nigerian fintech company to launch tokenized traditional finance assets. And there's all kinds of hype. For example, here, $1 trillion in stablecoin volume. But then have a look at this chart over here. This is the soy price relative to the altcoin market. So we're not looking at the US dollar chart, we're looking at how much does soy underperform or outperform the rest of the altcoins. Because that's in the end what really matters. What are our opportunity costs? What's our relative performance? This is our recent rally, an outperformance of soy of roughly 33%. Long term, the trend might be bullish, but for the last 3 years, soy tended to underperform the rest of the altcoin market by roughly 50%. Hi, my name is Gerhard. I'm in crypto for the last 8 years. I started this channel here 5 years ago, and 3 years ago I hit my first million. And I did this mainly through active trading, to timing the market. There's more detail in the pinned comment down below. This shows my trading history over here. So we've got copy trading, but have a look at this. This is my portfolio versus buying and holding Bitcoin, so measured in BTC, and that's the monthly alpha. So yes, there are some months where it's not that great, but in the end, the long term is what counts. On average, I tend to make 2% outperformance per month. And in this video, I want to share the data points that I look at in order to decide whether or not to buy or sell a certain asset. And so let's have a look at soy in more detail. Now for price charts, most people just look at the US dollar chart. And the problem is there's so much correlation in crypto. When Bitcoin goes up, most altcoins go up. When Bitcoin goes down, most altcoins go down. Now this is on a linear scale. This is not very useful because it doesn't tell us anything about percent changes. This over here, for example, is 500% of increase, but this over here is only 50%. So really, instead, we want to look at a logarithmic scale. Now, the vertical distances show the exact same kind of percent returns. And so we can draw the following lines. Soy long term tends to appreciate, at least if you believe in this trend. But then again, there is all of this correlation in crypto. And so a more accurate way to measure soy's performance is soy relative to Bitcoin. And that tends to trade in a range. We topped out at a very similar level to where we started in May of 2023. And we're also bottoming out at similar levels. Now this dotted line over here, that's the average ratio of soy relative to Bitcoin. If we work with the assumption that soy will just keep pace with Bitcoin long term, then there is still some more upside until we hit the equilibrium, roughly 45% of additional outperformance versus Bitcoin. But really, since we started 3 years ago, soy underperformed Bitcoin by 65%. And where does this underperformance come from? It comes from token inflation. So the number of circulating soy tokens grew over time. And this is how much they grew. So this is the tokenomics page of tokenomist.ai. And we see that there is staking subsidies, we see community allocations, but we can also see investor unlocks, Series A, Series B, that's the VCs dumping on soy. Now there is good news here, and that's not just the random headlines that we get everywhere, but it's in the fundamentals of the tokenomics chart. The supply growth of soy going forward is not that bad anymore. In May of 2027, we will have 4.259 billion tokens. Currently, we are at 4 billion tokens. So that's growth of a bit over 5%. Yes, that's more than Bitcoin supply expansion, but if we just work with the assumption that the soy network can grow quicker than the Bitcoin network, which should be our assumption because it's a much smaller network, Bitcoin is already quite established, then there is a chance that soy could outperform. But what about the adoption metrics? What happens when we look beyond the headlines? For example, what about the stablecoin trends on the soy chain? Now that's what we see over here. That's the stablecoin market cap on soy. This comes from DeFi Llama, and this is not necessarily a clean growth trend. We had our peak in July of last year, then went down, went up again. We tend to just go sideways now at around 600 million worth of stablecoins on soy. What about the total value locked in general? Again, we had a peak, this time in October of 2025, and tend to go down. Now, recently, this is going up slightly, and that's because SOI itself is going up. Many assets on the SOI chain, they are directly coupled with the SOI price itself. So maybe the more accurate way to look at the total value locked or the capital on the SOI chain is to not look at it in US dollars, but look at it measured in SOI tokens. And then we get the following chart. It's not necessarily that much prettier though, is it? In the last 2 years, the total value locked on the SOI chain measured in SOI went just sideways. The growth stopped in May of 2024. Here is the decentralized exchange trading volume measured in US dollars. Also, a peak in October of last year. Since then, we tend to rather go down. And so yes, the token inflation going forward isn't too bad. The supply won't grow that much, but the question is, how much will SOI itself grow? How much will the demand for SOI grow over time? What's the potential upside here? Let's have a look at the market cap. Market caps are useful metrics to determine potential upside. We are currently at 5.4 billion with a fully diluted valuation of 13.4 billion. But again, that dilution happens very, very slowly over time. So really, it's 5.4 billion. How does that compare? Let's have a look at other proof of stake blockchains. If SOI was to double from here, relatively speaking, so if the market was flat and SOI doubles, it would get into the regions of Hyperliquid's and Cardano's valuation. Is that realistic? Is SOI really getting used as much as Hyperliquid, for example? Cardano got a lot of hype in the early days, but really Hyperliquid is the recent growth story. Will SOI beat Hyperliquid? I'm not so sure. Again, given those metrics that we've just looked at a minute ago. But what about the short term? Because there's also bets on the price, right? People use perpetual futures, levered bets to push up and push down the price. For SOI, there's actually something specific here. For most assets, we do see the same in this regard, that there's more trading volume on the perpetual futures exchanges versus the spot market. So that's true for SOI as well. 1.5 billion in the last 24 hours on the perps versus only 300 million on the spot market. But there is a difference. Have a look at this here. This is the open interest, so the amount of bets that are currently made on an asset. For SOI, that's currently at 943 million, and it's the 9th largest asset in terms of bets on the price. It's at place number 9, so SOI is quite popular in terms of short-term bets. However, have a look at the market cap. Here, SOI is only at place number 23. In other words, there's disproportionately more bets on SOI compared to other cryptocurrencies. SOI is experiencing more short-term speculation, and that makes any rally potentially more dangerous. So let's have a look at the open interest over time, as in how many bets are being made on SOI over time, and how does this relate to the price? So when there's more bets on the price, what happens with the price? When there's less bets and less attention on the price, what then happens with spot? We're seeing this over here. So we've got open interest in green. How many bets are currently being made on SOI? That peaked at above 2.5 billion, and now recently with the rally it went to close to 1 billion. But then compare this with the SOI price itself. There is correlation, as in when there's much less bets on SOI, then the spot price tends to go down. When there's more bets on SOI, the spot price tends to go up. In other words, when open interest comes back down again, this will be bad for SOI. Now, when we just look at this chart, we might not be at historically high open interest levels just yet. So the current momentum might prevail for a bit longer. But we have to watch the open interest very, very closely. This, by the way, comes from CoinGlass.com. You can simply go to CoinGlass, search for SOI, and then look at the open interest. And then it makes sense to monitor this extremely closely. When this suddenly comes down, like over here on the 10th of October, where open interest for many assets went down, spot subsequently continues to bleed further. And of course, with this rally, we have seen a lot of liquidations, 20 million worth of liquidations on SOI. Many people were betting on a falling price, and the funding rate is quite balanced. So again, seeing more open interest is problematic, because if you're really long-term bullish on SOI, if you want to hold SOI over the long term because you believe in the project, you would not buy this on the perpetual futures market, because the perpetual futures market over the long term tends to cost around 11% per annum in financing fees. There are much cheaper ways to get leverage, to borrow somewhere else, maybe on Aave for example, for 5%, and then use that to buy SOI on the spot market and hold this long term. The financing is much cheaper, we still have our leverage, but the issue with that approach is it costs spot transaction costs, and that tends to be 0.2, 0.3%. So if you plan on holding SOI long term, you actually just buy spot, maybe lever this up in decentralized finance, and then hold it, and you're okay with paying 0.2, 0.3%. But if you get into SOI just short term, because you believe this rally might end anytime soon, you're just a short term trader that exits at any moment, then you're using the perpetual futures, because then the long term financing doesn't really matter to you and the transaction costs are much more important. And those tend to be very low on the perps. It tends to be 0.05%, potentially even less if you trade actively. In other words, high open interest means high short-term demand for SOI that will at some point turn around. But again, we're not yet at historical heights. I'm also interested, how can we potentially time SOI? Let's say we want to get in and out of the market. Let's say we want to go long whenever the trend is bullish. We want to go short whenever the trend is bearish. Is there maybe a way to time this market properly? What's the best moving average? So I have run a back test that's from Bitcoin Strategy Analytics, again available to the premium members of this channel. And the best moving average is over here. So this is all the back tests that I've made, from the 2-day all the way to the 200-day simple moving average. The 69-day simple moving average is the best for SOI. How much better is it? Have a look at this. Buy and hold would have given us negative annualized return, but longing and shorting the asset according to the 69-day simple moving average gives us more than 200% per annum. How consistent is that return? We see that over here. So that's now our equity line. Over time, it tends to go up quite consistently. At the bottom, we see the value measured in SOI tokens. This just goes sideways if we go long, right? Because we just copy the exact price movements of SOI. So the 69-day simple moving average seems to be useful to time SOI. Currently, we are obviously above that, but this could be a nice potential indicator if we wanted to bet on falling prices, or if we wanted to set a stop loss. For example, here, right? We first got our rally in SOI, that continued further, but then once the momentum slows down and we cross that moving average, then we can exit, or we can even bet on falling prices. But of course, currently we're very far away from this. Again, historically, the best was the 69-day simple moving average. You can just go to tradingview.com and then press / and enter simple moving average. Once you've done that, you double click on the line and then you enter the correct duration and make sure that at the same time you've got the daily ticks noted over here. If you're already part of Premium, then you can also enable email signal alerts. So whenever the cross happens at the end of the day, you will get an email. You can do this for any asset, but I will make a dedicated video for the premium members as well, explaining exactly how the trading signal notification feature works. So yeah, feel free to check it out. The link is down below in the pinned comment. There is a 7-day money back guarantee. So in case you do not like premium, just message me within the first 7 days. And then I refund you, no questions asked. You can either pay via credit card monthly, or if you want to, you can also message me here on Telegram and then we do a crypto transfer. If it's your very first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.